Starting off, let's just talk about what you do at Ramp. Give us the overview.
Sure. So Ramp is a financial operations platform. So corporate card, bill pay, treasury, all of that accounting stuff. What that really means for me as an economist is that I have this really great data set of business spend. So it's where and how American businesses are spending and moving their money. It's $100 billion of spend annually across 50,000 businesses. And that's extremely powerful. Now, there's a lot of economists at financial services organizations, at banks. Most of the research that they do focus on consumer spend. There's not a lot having to do with business spend, particularly in this world where a lot of the development that's happening, a lot of the spend that's happening is in these private markets. So a lot of the research that we do has to do with the spending on AI model companies and AI platforms and services. We see that directly from where companies on our platform are putting their dollars and budgets.
And so you just put out a report. Tell us a little bit about what that report, what is it and how people should be thinking about it.
Sure. So our main flagship research is called Ramp AI Index. This is tracking broadly the share of companies in the United States that are paying for AI models and services. So overall, we found, first of all, there's a big gap in tracking this. Census has its own measurement that comes from survey data. We found that the census measurement is probably not accurate and is likely undercounting the number of businesses that use it. In our estimate, we have about 46.6% of businesses are already adopting AI in some way. And most of that is OpenAI. OpenAI is the leader as far as being at the most businesses. Seen a lot of growth in the last year, started to slow down a little bit over the past couple months, and then shot back up this past month. And there's a very competitive industry here too. So we see Anthropic also growing business adoption very quickly, and then Gemini, also a very big player in this market.
And Ara, in the report, you talk about why the census might have been underreporting. Talk about what they were reporting, what the number was, how they were asking the question, and then what changed and where they're at now.
Sure. I mean, it really gets at what's so hard about measuring even the question of like, what is AI adoption? What is AI use at all, right? So this is a really big question that you're trying to resolve, particularly in economics nowadays. There's a lot of hope that AI is going to be the technology that's going to launch the United States into the next era of a productivity boom. It's going to be really hard to measure that using productivity statistics. Those are often pretty volatile, and any kind of new technology takes a long time to actually show up in where and how businesses are operating. There's a learning curve to employees learning how to use a new technology to make them better at their jobs. So at the same time, we have a lot of money going into the AI sector. And so you want some kind of measurement to suggest, hey, is this actually driving any benefit to the companies that are paying for it? Or is this all just, a useless bubble? So there's two major measurements of that. One is a census measurement. This is a survey that goes out to businesses every 2 weeks, and it more or less asks them a question. At least for about 2 years, it was asking them this question: do you use AI to produce goods and services? That's pretty much what the question was. And for about 2 years, the estimate hovered at around 3 to 6, 7% of businesses who said they were using AI. And if you're someone who watches the industry very closely, you would look at those numbers and you say, that sounds really low, particularly because it wasn't really budging, even though we saw more and more businesses talking about it in earnings calls, saying that they were using AI. The development of the AI tools themselves got much better. So you could imagine someone was probably using more of it, and yet it was hovering around this level. And then private estimates were saying something very different. So the second way of measuring it, you can use actual spend data. So that's what we started doing at Ramp, is that we saw the actual money movements that were happening, where businesses were not only spending on AI models from OpenAI and Anthropic, but increasingly spending on other kinds of platforms, or like the Cursors of the world, or out-of-the-box solutions to actually augment their customer service or sales platforms. And if you use spend data to measure AI adoption, you saw a very different estimate, not like 6, 7, 8%, but 45%, 46%. And an estimate that also skyrocketed over the course of 2025 as the market became much more competitive. Now, there was a lot of criticism, therefore, the last year, including, by the way, from me, of sensitive data, to say that, hey, this question doesn't really make sense. Do you use AI to produce goods and services? Mm-hmm. It's a weird question, right? Like confusing. Goods and services. Yeah, confusing. Goods and services is AI, is like econ speak. Most people don't talk like that. That's the first reason. And the second reason is, I think the question made sense when it was written, where the idea was to measure the impact of AI on actual production. But since then, the AI product ecosystem has expanded more so to build products and augmenting other parts of a business. Maybe not exactly like producing widgets on a factory floor, but certainly making engineers more productive, salespeople, marketing folks, designers, sort of internal business functions of a company, customer service. And so over the last 2 years, more and more people have been saying, hey, we should probably revise this question. It doesn't really make sense for how the AI product ecosystem is developed. And Census came around to that. And now in their last estimate, they changed the question. So it went from, do you use AI to produce goods or services, to do you use AI for any business function? Much more sensible question. And the adoption rate almost doubled. So we went from about 8% of businesses saying they use AI to about 18%.
But you still see a large discrepancy between that data and your own. What do you make of that delta?
So it's two things. So you're right? Because census estimate says 18% of businesses use AI. RAMP's estimate says 45, 46%. So I think it's two major things. One is that I don't think RAMP data is ever going to be perfectly representative of the entire economy until RAMP takes over the world and has everyone on the platform.
I don't sell the product, it skews towards technology companies?
It's not that it skews toward tech companies, because we actually don't have a particular sector skew in our data set. It's more so, I think, that it skews toward at least tech-forward companies. So even the construction companies on our platform, or the manufacturers, or the restaurants on our platform, they're typically going to be the kinds of businesses that would otherwise want to use some kind of new technology, just by nature of the fact that they're using something like RAMP, which is itself already this like AI finance automation tool. And so I think any of the businesses on our platform are more likely to use some new and exciting tech, including AI.
All right. If you're looking at spend data, is there a chance that a company has purchased ChatGPT licenses, but maybe aren't actually using them because, let's say some manager said, okay, we have to get on this AI train, everybody buy a ChatGPT account. But, I think culturally they're not adopting it and actually using it. Do you think that could be happening? And what is the margin for error there?
Yeah, for sure. I mean, what you're getting at is one of the key questions in the research today, which is, well, where do you draw the line on adoption? Because in our measurement, the implication is that adoption just means you buy an enterprise chat subscription or just spend a lot of money on an API. But that doesn't actually say how people are using it. Now, I will say that we have some other research that shows that it's not just money being spent, right? The contract sizes are getting bigger, and then the retention of these products is getting bigger, is growing. So like now we're at about like 80% retention year over year for an AI contract, versus a couple of years ago we were about 60. So what those two things tell us is that if you are a financially conscious CFO at a company, you generally do not extend a contract for a large software vendor, certainly if it's like $1 million and spend a year, unless you find there's some benefits or usage happening at your firm. And so if we assume that these budgets are CFOs voting with their dollars, they seem to be voting in favor of moving out of the sort of experimental pilot program focus of AI into a more, these are large, significant investments we're making that we're already seeing some gains from. Therefore, we're going to double down and increase the contract sizes.
Apparently, you get in a lot of trouble if you buy $1 million software and no one uses it.
I mean, I think that's one of the things that's like, there's this conversation about the AI bubble. And so the assumption is like, oh, all these people are just, all these CFOs are just, or CEOs, CFOs, whoever the executives are just saying that they're using AI because of this hype train. Like, costs a lot of money to say you're using this stuff.
Yeah.
And so I don't think, most of the executives in this market are acting so haphazardly. I think, they are, at least also from the people that we talk to, being very conscious about, which provider they're going with. Increasingly, there's also multi-homing. You're not just signing up for one AI, you're not just doing open AI stuff. You're also increasingly going to sign up for some services from Anthropic or Gemini. And so, you don't have to do that if you're just doing this for show.
All right. So actually on that front real quick, if you're going to scan through X, it seems like the general perception is that Anthropic is the enterprise AI company. And so in my head, I think, oh, well, maybe they have more adoption in the enterprise. But what your data indicates is that it's actually OpenAI. Is that right?
There are a lot of different ways to look at it. Like, OpenAI is definitely at the most businesses. It's, I think, in part because of its almost default status as the consumer product. Like, a lot of people do just think of AI usage as going on to ChatGPT. That it has also become almost this default component of spend for many businesses. I mean, 35% of businesses on our platform, more so, already subscribe to OpenAI in some way. And that's in part because, hey, if you're going to do some AI investment, you ought to start with a ChatGPT enterprise subscription. So there's that. But Anthropic customers also tend to spend more. Anthropic tends to lead much more heavily into the tech sector, lean much more heavily into large API spend and large contracts there. And so it is a very competitive market. If you're looking beyond just adoption, just looking at dollars spent on these tools, Anthropic for sure is a very competitive player in the enterprise space.
All right, as you're seeing the spend on AI increase, the adoption of AI increase, are you seeing other sectors, SaaS, decrease in parallel?
Here's the way I usually say it is that if you look at ramp spend and you divide by sort of sector to subsector, as in like the fastest growing part of ramp spend is companies spending on other tech companies. So that means tech companies spending on other AI services, but also spending just broadly on a SaaS ecosystem. And so I have no evidence in our data set to suggest that there's a broader slowdown in software spend overall.
Okay, so just to clarify, I think you cut out just for a second. You are seeing the spend on software outside of artificial intelligence also increasing.
Yes, outpaced by AI spend. AI spend is increasing faster for sure.
There was a sentiment, not unscientific, that kind of spend on SaaS, people were getting sick of per seat pricing, and they were just trying to reduce their spend and reduce the number of vendors that they were paying. Did you see that? And then I guess you're saying that this kind of the trend is going the other direction now, if you did see that then?
Well, I've heard the same anecdotally, and I think we're increasingly there's all this talk about, well, how are we going to start to price these AI software contracts, right? When we head into this agentic world where more of the product that's being provided is the work that's being done for you, and not necessarily the number of people that are using the software. It's all going to be done in the background. So I think there are a lot of reasonable conversations about how this market is going to develop there. But it's going to be difficult to measure in the short term, especially because we are in this market right now where there is a truly unprecedented number of companies coming online, like startups and software companies coming online to sell their services. Development is so much faster and easier. And alongside that, you're seeing a lot of companies on our platform want to experiment with these new tools and services. You could say that I think a lot of the sentiment that you're expressing is coming from frustration with a lot of the enterprise software providers and saying, well, they're not keeping up with the software development that's happening. And therefore that is being replaced by new upstarts where it's not that the spend is disappearing, but it is shifting over to new and emerging companies.